Hey, thanks, Marty. And I hope that I'm going to reconnect in YouTube. Sorry for that. We had a transformer explode. I mean, literally explode. So, am I back in YouTube, guys? How we doing in YouTube? Am I back in here? I need a little know about that. All right, I'm going to continue along. Sorry for that, guys. Costa Rica, things happen. Hold on. Trying to get everything back. Okay. All right, back in YouTube. Thanks, everybody. Thanks for your patience. Apologies. Had a transformer explode. Monkeys don't like that. Okay, where am I here? I don't know if you can hear the monkeys. Sorry, kind of discombobulated here. So I was showing you that the low, ETH low was here, would set up this. And the high volume was around 45. And this is based on the full session close at 1600 or 4 p Central Standard Time. Okay, thanks, Stephen. So this sets up the possibility, and let's look at our possibility. Yesterday's high, this high, and coming back here, which is the target for the day. So let's see how this might work. Now, nobody knows what's going to happen. This is part of the thrill. And I'm going to try to get back. Okay, let's try this. You'll notice that was our crash. Sorry about that. I cannot fill that in. So I'm going to, if something is different than that, I'm going to try to, you'll let me know. Because my levels might not be accurate in here. In fact, they're not. Okay. But we'll get a general idea and we'll take a look. I also had here crash. So 8 minutes in. So you can see being in Costa Rica can present some challenges. And this is the last year I'm coming down here, at least so far. I'm going to be in a different place. You know, being in the jungle, or, you know, when I say in the jungle, step out the door, you're in the jungle, has its challenges. By the way, remember, if I have a power problem here again or drop out, I will recycle, attempt to. So, RTH open. This is, for me, the retail price from yesterday's RTH. So the way I look at this is, if I open and this is too low, remember, shopping, then I can go higher. So I'm opening in range, in value. So this is my fair price. So I can anticipate the potential of two-sided trade initially, okay? And then this is called value area high. Value area high is inside of value, and typically value is, you know, the highest volume is here. 70% of the volume took place in here. And the overnight volume point of control is here. A volume point of control is the same as this. So basically, we're in balance. But let's go a little further. Yesterday's low. What do you notice about this that is similar to yesterday's narrative at the beginning of the stream? If yesterday's low is here and the ETH low is here, what is the language? This, remember, no indicators. My indicator is this: participant behavior, because it's the ultimate truth of the market. What do the participants, the shoppers, remember the store, if the shoppers think that yesterday's on sale price in the ETH is still too low, and my retail price from yesterday is here, and I open above it, is it possible This is too low. This unknown may be too low or maybe come down here. Don't know. And if I come out of here, then I have over 90% probability to take out the ETH high or low. ETH high or low. If I take out the ETH high or low, and I'm going north, and I already know that I tested yesterday's low, and remember what we did in the previous day's ETH, the ETH low in the previous day was a naked volume point of control or retail price. Is it possible then, if we do something similar here, that it's too low? And again, who knows? But now I open in value in range. That suggests the possibility for two-sided trade. So we have to be conscious, and this is just always maybe, we have to be conscious that we might come back down, and I call it a stop pick. A stop pick is, since you're in balance, the possibility exists for two-sided trade. Now, who knows? Okay, so we're in the I don't know. But how about this? Over 90% probability for the ETH high or low. Don't forget what the ETH low did. It tested yesterday's low. So north, maybe. Yesterday high has over 80% probability. Past performance not indicative of future results. And what else do we know? Stops over yesterday's high. And previous highs. Stops here. What else do we know, you ask? This is the previous retail price. Target. Okay? And where does this come from? I just showed you at the top of the stream. I'm not going to take our time because of the dropout. And hopefully the wizards at Bookmap will splice these two together. So you'll be able to review it in its entirety other than the technical interruptions. Transformer explodes. And this is right out here. Flames shoot up. It's kind of a unique thing. Adds a certain dimension of what's going on. I figured it was a monkey or an iguana. By the way, iguanas here are like Volkswagens. You could ride them if you want. So, and again, now I don't know if these levels are accurate because of the data drop. So I'm going to narrate it based on what I saw. It might not be what is. It might not be that. So I can't tell you. One moment. Sorry about that, guys. So I have a hole in the data here, but let's look at this potential story. And again, please forgive, this might not be accurate. I call this a developing or variable high volume node. It's called developing volume point of control, and what it starts at RTH is 0. So as the volume comes in, this is measuring the volume. So as the market comes in and the volume comes in, if there's more volume there than down here, and all we did was open and go up, then this might be a form of support. And I label it. I call it a variable high volume node. And remember what I already know. I know that maybe what's below me is too low. Why? If I open above it, and this is the fair price, and this is the fair price from the ETH, might come down there, about an 80% probability to get there. How do we know? Well, there's a 67%-ish probability to get there, 80% there. What do you do? Well, this is a big question. You follow your plan. Now, if you don't have a trade here, you hang out and you narrate because you don't have a trade. And this is a very high-risk place to trade. I always say for developing traders, don't trade here. Hang out, observe. So if the market opens here and goes up in a balanced open, which means potential for two-sided trade, we can rotate. That's why this is not a place to rush in. It's not the same as yesterday. Yesterday we had driving behavior. We gapped higher, we drove. You should watch yesterday's stream and then compare it to this one because it's a different day and you would start out with a different plan. Does that make sense? You need to look at each day and compare them, because every day is unique, and how the market unfolds is also unique. Why is it unique? Because it's random. So, by the way, again, if I drop out, I will return. So right here, let's look at this. Now, this is not a trade anybody ought to take. I'm going to show it to you, though. And this is only for very experienced traders. This is a sweep. And I do not know if these levels are accurate because of the data drop, so you're going to have to forgive me. And I'm going on the assumption they are. Retail price, sweep, upside rotation. Clueless about this, rotation down. Opening in range, in yesterday's range, in value, suggests two-sided trade. So I already know the potential. And it could do anything. So it could also just open and do this move. Do I know? No clue. So not my job. I can't know, so I don't try to know. I try to do is align. So I come down here, and again, no clue. This is my retail price. We don't tag it. And then I come back. I come over this, which is variable high volume node. This is my resistance up here. I got to label it. Why is it resistance? It's a great question, and I'm not sure it is. Guys, do we have a variable high volume node at 51.25 around at 8:43 Central Time? Just want to confirm that. TraderLab. Okay, thank you, Pablo. Okay. Appreciate the response. So, what do we get here? Absorption here. There's the iceberg. There's sell stops coming out. There's a couple things we need to know here. One is the market is long from yesterday, so they can become, at some point, we don't know when, potential sellers. We get this move. This move is aggressive buying. Now, and if this is a variable high volume node, I want to show you. I'm going to try to show you. I'm going to plug something in here, and I hope it doesn't crash me. Very cautious, because this computer is like bug on its back. Random crashes. It's like a little hand comes out and slaps me. So this is too high. This is too low. Support, no clue. Break high. This was too high. Break high. This now becomes support. Now, this is on the run, so you might not have a trade here, okay? ETH high is the first target, 90% probability. Now, this came in here. This was a surprise, and I believe we have a report that came out. Since everything crashed over here, everything is gone. So let's look at this. Now, what is happening here, when you see this in the profile and it runs away, this is a trending configuration. And what is a trend? Normally, when the market's in a fair area, this resets over here at RTH open. It does one of these things. Balance. Too high, too low, retail, which is here. But if I break away from it, which is what happens here, then we can start moving. And if we move, then we do one of these, and this is your new retail price. And this is like multiple time frames, but this is not regulated by the clock. And if this is too low, then I do another one. It's too high, too low. Oh, it's on sale. Retail, too low. Too high, too low, retail, too low. Too high, too low, too high, retail. And we keep going, okay? I got to, hold on a second. I got, so this is a trend configuration. In the TraderLab, you would know now that the condition of the market has gone from a balanced two-sided trade to a directional market. So the only way you can trade this, at least I'm not saying that categorically. I'm going to say maybe the primary way to trade it is longs only. Now, if you want to sell it, you have to have an edge as a counter trend trader. Me, not so much. I can trade both sides, but in the TraderLab, I always advocate developing traders stay with the dominant side. And if you define what a trend is or directional market, what do? You get aligned with the longs. Now let's look. I got some power things going on again here. Let's keep our fingers crossed. Yesterday's high, over 80% probability to take out yesterday's high or low. Well, what do we do against yesterday's low? ETH low, too low. So doesn't that put this on the table? Would you be fading this or would you be buying it? This is the question for this astute group of traders. And what is this up here? These are highs, previous highs. What's at previous highs? Buy stops. Are you going to fade this when you know the shorts are getting squeezed? I mean, is this a deep question or is this common sense? What does the market do? The market goes up to go down and goes down to go up. Why are we going up? Because there's buyers in the market. Who are the buyers? The shorts and new initiators. Where's the stops? There, and there. And then this is your retail price. So this is the primary target. And then whatever it does, it does. And if we get up here, then there. But for today, the primary trade, at least for me, was to there. And it doesn't mean anything. It might not go there. This is trading, right? Part of the thrill of randomness. So, what did we do? Take out this high, take out that high, and the target was there. Okay? And as you can see, didn't quite get there. Doesn't mean it will, and it doesn't mean it won't. And so you guys understand, this was the target on the low side. It got there, and it went a little. What does that say to us? No precision. That's the auction. The auction is not predictive. It is reflective of participant behavior. And I know we all want to be, quote, right. We want to know. How about being in a business where you know you don't know? Is that a better position psychologically to be in than predicting, becoming rigid and myopic? Your brain will filter to things that contradict what you want and need, where if you understand you don't have that, then you're not going to be looking for it. So this happened, and I know I saw this and I went, what? You ever do that? What? But what else do I know? ETH high. What else do I know? Explosive buying in a sweep. What often happens on a sweep like this? And I'm using the term often, counter rotation. But where is support? Isn't it out in here? So if it's out in here and I go up and now it's running away and my FOMO brain is going off, I took out yesterday's high, but I still got fuel up here, right? And my target at 76. What do? What does my plan tell me? Get long. So where might I get long? I get the sweep here. Now, when I get the sweep here and I'm against this and I'm against the ETH high, now again, subject to plan, and for me, I'm going for this. So when this happens here and I get the sweep, if it's in my plan, I can get long because of this and because of this right here, break. And so this is a potential level. This is a potential long for an advanced trader. Otherwise, nada. There's another piece to this too. Yesterday's high. So we move outside of range, and this suggests longs only also. So you have a long here or you have no trade. You just don't do anything because the train has left the station. This is where trade plan comes in. So here's your fuel. Now let's watch. VPOC migration, new retail price. Now, it's possible you have no trades and you're just sitting here feeling FOMO. And if you respond to FOMO, you've got to learn that you have all day. It doesn't matter. Let's watch. So what do I know here? Oh, I'm above yesterday's high. I'm taking out the fuel, and this is my target. That's what I know. So let's watch. Sweep here. Sweep here. No trade because this is an outside edge. If it came out here, the way to participate in a trend configuration, which is what this is outside in trading. It's called mean reversion. But the issue is here, we're not coming outside. We're just driving higher. And this is the target. So let's keep going. Now, at 9:30 Central Time, we have a statistic called the IB stat. The IB stat has over 90% probability of taking out the first hour's high or low. Dan Trader, I'm not sure, do you add volume, ledges, and confluence? I'm not sure what the question is. Dan, you want to repost that? Hold on one second. Yeah, the transformers are overwhelmed. So, no, nothing. Now, 9:30 Central Time, we get what's called the IB, or initial balance. Now, I posted a question in TraderLab that if this has about a 98% probability of taking out the first hour's high or low, and that's the primary target, what do you do? Well, there's no qualified trade here. Okay? Now, the first qualified trade that's going to show up is going to be an outside edge, and we have a 98% probability, of getting there, and that's our target. So I'd be looking for a long out here to revert back here, mean reversion, take out this, and go there. So this is a structured trade in TraderLab. Let me show it to you. So notice the liquidity comes in the book. This is an outside edge. Remember shopping. Oh, it's on sale. Retail, over 90% probability, target. This is the trade. Here's how it works. Now, it's called VWAP to VPOC. And you have to be aware, VWAP, and the target is here for risk neutral. So you have your sweep, dip, absorption right here. There's the seller. Now the seller, what's happening here? This is how Bookmap is really important, because when you have delta, what's going on here is there's sellers. Who are they? Well, here's a stop and iceberg detector. Stops are coming out. Oh, the pain of it all. Sweep. Sweep suggests counter rotation. Not here, but maybe something to look for. There's the resting liquidity, and look at the icebergs. What's going on here is the icebergs need liquidity, and these are market orders, right? Stops become market orders. The icebergs need that because they're passive. So a market order needs a passive order, okay? You don't get a market order because they cross over. So what you need is limit orders for the market orders, and those come out as stops. So we can see the stops. We have the liquidity. We have the sweep, and this is our target for scale, and then there. That's the trade. Okay, I'm just telling you it's a trade, and whatever it does, it does. Watch. Sweep. And the other thing I always talk about in TraderLab is do not put your stop here. And the reason for this is that if we counter rotate and come down, I call this a stop pick because there's sell stops under here. And if the buyers, it's just logic. And notice 300 stops come out. Those stops were here. Why do retail traders put their stop there? They're risk adverse. Who isn't? But statistically, if you have vetted, you already know that this is vulnerable. Let me tell you what else you know. You know that the buyers that were here, if they still think this is a deal, 5 in the shopping cart, and it comes down here, and I get the same thing. Look what I have. Sweep, same as here. Sweep, potential counter rotation. Stop pick, sweep, absorption, big absorption, counter rotation. Still trying to go here. So for me, no stop over here. This actually makes the trade better because now I got the weak longs out and I have absorption. So this is and what else? Yesterday's high. If I stay outside of yesterday's range, I'm looking at this. That's a trade. It's a structured trade. Now let's see what happens. It fails. Okay, stop. Are you okay with that? Got to be. Let me explain what else happened. There's a little bit more. There's a couple ways to work this. And I'm going to take you a little bit into microstructure. This is the mean. And what it means is this is the highest volume. Remember shopping. If I come outside, I'm looking for what's called mean reversion. This is mostly the behavior. So I went from directional to rotational, but I'm outside of yesterday's range, so this is qualified. Okay? There's my long. Now, here's a couple other little pieces I know. I have sellers here because there's my buyers, buy stops, and I break low. So I know there's sellers here. I come up here. It's resistance. I break low. Here looks like support. My resistance is here, right there. I know that. Now, what I don't know, of course, is anything other than maybe. Maybe it'll come here. Maybe it'll go there. Maybe it'll go there, and maybe it won't do any of it, right? Write that down. The best you have in this business is maybe. And why would that be? Because the outcome of any individual iteration or trade is random. The thing about the business of trading is it's about probabilities, not predictability. So what's the probability of getting risk neutral? Well, if it's positive in this trade, in this context, then you put the trade on. And everybody takes full stops, and that's just life in the fast lane. Overhead and cost of production. If you put this trade on either here and you managed it properly, or here and you took a stop, you're following your plan, you give yourself it's like getting a positive. It's a positive. It's not a negative. The outcome is random. Your business plan is anchored. In other words, you follow a plan. Your job is to execute the plan, not predict anything. This trade, great trade. Didn't work? It's fine. For me, I did my job. Now, I'm going to tell you a little bit more about what's going on here. I know, not what will happen, but I know what happened here. I see my sellers, and I have absorption. That's the green bubble. Now, I have my sellers are below my buyers. Well, that's a little disconcerting, but it doesn't mean to get out. I have my sweep here. I'm looking for the rotation. There's my absorption. I'm just going over the logic. This says get long. What else do I know? Stops are here. Does Tom put a stop there? No. Do you? Sweep here. Stop pick. The buyer's here. Looking for them to come in again. Look at all the stops coming out. 200 there, 15, and who knows what else. Long. And now I got to clear where the sellers were. And that's my target. And as far as I know, that's where it's going until it's not. Now, here's where things get a little funky. This is the retail price, and it's called, or the mean, and it's mean reversion. My alert starts going off in Investor RT, and my alert measures the volume. What it's telling me is, while I'm sitting here churning around, fiddling around with this, that the volume over here is starting to get within 500 contracts of the volume up here. So I have and I'm just mentioning, it's telling me there might be a problem because if more volume is here, let's look at the language. Maybe that price is now too high because now the participants are hanging out here. We're not rejecting this and coming back here. Because I'm spending time here, maybe it's too high. Now, I won't know, not blessed with, I only know that my teeth start to chatter. Now I get VPOC migration. This is the moment of truth, because if that's too high, and this is the retail price, two possibilities right here. It's too low, and I come here for my next target, and then potentially up there and so forth, or this is the retail price, and if I break low and not high, there's trouble. And exactly what happens, trouble. The trade fails. Now I'm back inside yesterday's range, and all bets are off on the long at this time. Is everybody with me? Now, let's look at something else. What do we know? Well, I'm back inside the range. So this puts everything sort of in the what's going on moment. Do I take longs? Do I take shorts? Or do I just get on the sidelines? Let me mark this variable high volume node. So this is what I do. I see change, but now I have no structure that I want to trade in my plan. I can trade rotations, but then I'm only trading this stuff. And what is this down here? A variable high volume node. What do we know about it? Let's come back to microstructure. Now, this is not a trade I take. This is just fun facts to know and tell. It's there. And there's this one down here. Do I have that one marked? Let me get that. If it's accurate, I don't know if it is because of the power and all the other problems here. Remember, if I drop out, I'm in Costa Rica, and I am, you might say, technically challenged. So this right here is support. Now, I'm in an outside edge. This may or may not be your trade. It might not be my trade. What do I have? Sweep. Okay? Sweep. What did I have here? Sweep. Where am I? Outside. What was this? Too low. What do I know? Nothing. Since I don't have data here, I really can't comment on what's going on here. So this is our variable high volume node. If you have a way into this, you'd be coming to VWAP, and then you'd be coming here because this is a target. If this is too low, I wish this wasn't here, then this was too high. This is your resistance. Next resistance is going to be this one. And remember, we have the IB high, IB low over 90% probability. Back outside of yesterday's range. Going for this, and again, going for this. Guys, I do not have the data here. I can't tell if what I'm looking at is correct. Was there a structured trade for a long in here? Because I can't see it. TraderLab, was there a structure in here to work with for the long? Was it this one down here? Because I can't tell. Tested the value area. Because this is a location, but I don't know if there was more to this. Yeah, the 53. I don't see a VWAP long. There is no VWAP long here that's a structured trade. Matt, the VWAP long trade is a reversion trade. It is not a running breakout trade. It is, so this doesn't exist here for a trade. The way it would work is you would come outside and then come back here. It isn't just doesn't work that way. So that's not a qualified trade. Be sure to vet it. VWAP to VPOC is reversion directional. This is rotational, and this is reversion, but look where the VWAP is. So, this area here is possible, and it's because of the value area. But this has to be vetted. I would say this is a little bit more difficult, because if you get long here, there's your sweep. So you have the pieces. There's your location. And let's look at the trigger. I'm going to show it to you. Now, if you're sitting here, see, I lost my data here, so I can't tell, which is why I was asking you guys. Let's look at this. So we're coming down, and it looks like we're going to come out the bottom, right? It looks like it's failing. Fine. We're inside yesterday's range. It's all over. Market is long from today, and the market's long from yesterday. It is not unreasonable to think that we might take out the IB low versus the IB high because we failed. So, and we have over a 90% probability to take one of them out. Certainly looks like it'll be this one. So, but let's look. This is a key element. It is where, 70% of the volume took place from yesterday. We're above yesterday's retail price, which we checked in the ETH. Remember, we opened, all of this. We're above the fair price, and this is a variable high volume node. I find this a difficult trade, and for me, I can't enter here. I'm going to show you my entry and it's just the way I do it. I'm not saying there aren't better ways to do this. I'll never say that. That's why TraderLab exists. I learn every day. Trading has no room for ego. You have ego, you actually have a problem. You need humility in trading because it'll humble you. So you start out being humble. Because ego will take you out of the business too. Because if you have ego, then it's about being right. And you can't. The only thing that's right in this business is your plan. Well, something here also is not right. Speaking of not right, I'm really at the mercy of technical issues here, guys. Hopefully I won't crash again. All right. Sellers are here, sweep, looking for, when we see the sweep, what do we look for? Reversals. Is it going to happen? No clue. There's the change in behavior. How do you know change? Rotation. Where's the change here? Oh, there's my sweep. I don't get it. Break low. Come back. What's the rotation? The shorts are still in control here. There's my sweep. Where's my rotation? And here is location. And this is location. Now, when this happens here, for me, I'm going to go, what's happening? And I don't know. Now I see change. Notice the rotation. So that's the first hint. The other, that there's change. The other hint is this. The other hint is location. And this is a test. Now, the fact I'm in here is trouble for me for long. But this changes it. So now I have a trigger. Now, unfortunately, since I can't pick the high or low of anything, only in hindsight, and unfortunately I don't trade hindsight, but what do I know? The buyers are here, the absorption is there, there's the iceberg, there's the stops, thanks for playing, they get a coupon to the buffet. How do I get into this? Here's what I know. Now I'm going down in microstructure. Buyers, sellers, there's the seller, there's the absorption, clueless, high volume, here's what it looks like. I'm not paying that. Yeah, but it's on sale. Previous retail price too low. No idea. Retail. Microstructure. This is called mean reversion, and this is multiple time frames. If I come back there, this is the mean of this, or the high volume. Now, if I go up in time frame, where's the mean? It's there. That's the mean. So if this is the mean and it's too low, and I get a change in behavior, now I got to find a way to get long, or I don't have a trade. And if it just runs away, I sit here and I'm in my Barca lounger. But what I know is there's my buyers. So what happens if we retrace, and where might we come back to? Here. And either fall out the bottom and take the stops, or revert. And this is also key. Okay, so I have a few pieces. Let's see what it does. It didn't get back, so I would have no entry. Just telling you, that's me. And I don't know what happened here. Guys, did it come back to this 53 area, this outside edge over in here? Matt, if your VWAP was lower, unless mine is not correct, then you need to do something about your levels. Yeah, I see the sweep, but what about a retracement? Did we get a retracement back for entry on this? No, then there's nothing here. Okay? Nothing. No trade. I wish I didn't have the hole in here. Now, there's another way to work this, but I don't know what this looks like over here. When you break here and you hold this, is this accurate here, this 58 quarter? Okay, thanks. So when you come back here, so the way to kind of think about this, this is too high. This is the retail price in the developing time frame. I really can't tell what's going on here. I really can't tell. Because this also, let me show you this. So this is your trigger, and you would be looking for a long here, and your stop would be out here. When you pull back here, and this shifts down, if that's accurate. Now you pull outside, support is here, and this is an outside edge. This is your low volume node. Here's what's actually happened. This is a retail price that's too low. That. So that's why you have the change in behavior. Now what you have is we rotate down. This is an outside edge right here, low volume node, and this is called mean reversion. That's the mean. And then this is the outside of this distribution. And the volume point of control is here. So if you come out here and you get across here, then you can squeeze these guys. You can go to the mid where we can anticipate sellers, and they might be right, and then we continue down. Or we can go up here and get these guys. And this is now, this will shift back up potentially. And we're outside of the range. This for me is a very tenuous long, and I can't see the structure. Now there's another one. This outside edge is over here. This is too low. This is the LVN. It's at yesterday's high. This is resistance. If I break above it and I've got the LVN, this stuff is really advanced. I really don't want to go here with you guys. So let's assume there is no long. Let's just take it that way and say there's no trade. Now I know there's traders in TraderLab who can trade this. $58.25. Yeah. Yeah, it's a very aggressive trade. So I think for developing traders, there would be no trade. And I would think that's the better way to work this. Not look at this one trade, but look at the collective of trades. These are very difficult entries. And I think now this, I think, was a pretty good opportunity. But you would have to, and let's look again over here. I wish I didn't have the hole in the data. I wish this was here, because you could be entering in this also, but I really would like to see the structure here. If we have the absorption here, and there's the support, and I get something, some structure here, I could be leaning on, if there's something here, I could lean on this, but my stop's got to be below here. Just saying. And again, if it's not your trade, there's nothing to do. Now we have over 90% probability of this, and we're back to that. This is possible. This is the primary target, and we know there's shorts in the market. So it'd be reasonable to anticipate that there's a potential little more action going to happen up here. So subject to your plan, right in here, and again, not a recommendation of to vet this, if we have shorts now in here, and they are going to be stuck, then we can expand past here, and now it becomes runner to here, over 90% probability, retail price here, and if I continue through, I can get here, or it's trade management. Then you deploy a trade management process for an extension, and you're also managing this trade as it goes along, subject to your plan. I do think, now this is still not good for developing traders, because you have to have recognition, and developing traders really should be a little more structured. You know, if the market is not precise, it can, you know, why do we have red bubbles here? Because there's sellers here. There's a sweep that suggests the downside rotation, but this would be an ideal location. But look how close we got. You know, is that close enough in an imprecise business? You see? So if I'm looking for this, which is a structured entry, let's look at it. Let's come back and look at this trigger. This is where the buyers took control, okay? So this is support, resistance, and there's the sweep. All this is giving you the eyes open, no snoozing. Sweep, looking for the reversal, absorption. Right here, no clue. Here, resistance, absorption is here. This is support, no clue. Buyers are here, no clue. Break high, run away. Okay, long. Now I have to wait. I'm just showing you. This is a potential long entry. And I want to say, if you didn't take it, it's not a big deal. And the reason you might not take it is you might put your limit order. And I talk about structured entries, and it's just a way to help traders develop discipline because of the fear. You know, we're all fearful, by the way. We're fearful because we're wired, because of uncertainty, and we're going to seek certainty where it doesn't exist. The other thing is, in this business, there's no precision. So we know areas of behavior. And remember why? Because the buyers took control there. So if I come down here, I'm looking to get long. Now, in a structured process, I always say traders should put their entry, a limit order, and again, you have to vet this, 1 to 2 ticks above here. and the stop 3 ticks minimum under there, under the low, wherever that is, that swing. So where I think it was here, wherever it is, 3 ticks under. So it keeps you in around a 3-point risk. Now, if you're mechanical, you might not have got picked up. So let's say you're 53.25. And where'd we come? Half, you see? Even if you had it 2 ticks out, you wouldn't get it. You'd be unable, most likely, because you're using a limit order. So if this happens here, and you see the absorption and you break high, this is where your judgment comes in, or you have no trade. I'm just saying, I'm coming back here because this is a structured entry, and it maybe did not work for you. That's all I can tell you. So other traders are going to see this. They're going to see the buying, and they're going to have to put their stop out here. Does it work? That's a 5-point risk. You know, if it's outside of your risk parameters, there's nothing to do. And that doesn't matter. What matters is following your plan, because this is just one event in a lifetime of trades. I just hope it makes sense to you. So if you didn't get long down there, then there's nothing to do. Just hang out and feel FOMO, because that's what you're going to have right now, FOMO. Where are we trying to go? There, right? And there's a target. Trade would be over. There's a sweep. What does it suggest? Potential for a counter rotation, and we need to watch this and this right here. Let's watch. And we have an outside edge back over here. Primary target. Might you be done with the trade? See? This is trading the targets. This is the auction. How we do it? Please give a like if you're visiting in YouTube. Sorry for the difficulties here from Costa Rica. It's always a challenge when you're on the edge of the jungle, or in the jungle, basically. And when I say jungle, I'm not kidding. There's things walking around out there you don't want to run into. I mean, it's almost like being in Brooklyn, New York. There's people there you don't want to run into. This is no different. By the way, I grew up in Brooklyn. That's jungle warfare also. So, target. And this might not be done. If you're trading a structured trade plan, would this work for you? Now, again, you might not be long because of the structure, right? But this, you could also enter, but you're going to have more risk. All of that's up to you. I can't tell you what to do. I can show you what you might do and why, but I can't go beyond that. And even then, I have no clue. This is not a business of knowing. It's a business of maybe. You should write that down. It's business of maybe. And if you, let's go back to the analogy of casinos and how they operate. They work on edge. So, and they don't know the outcome of anything either. Neither do we. They don't either. And whatever happens, happens. We are all about this trade. I coulda, I shoulda. The only thing you shoulda is follow your plan. That's the measure, not this. And you're going, oh, I shoulda. No, you shoulda nada. If it's not, if your plans to buy the retracement, which is a smart way to do this when you're developing, here's why. When you see this, you buy this. What do you got going for you? All this risk. If you have discipline to say, oh, I see the change in behavior, I see the sweep, and now the possibility is to go there. If I get a retracement, now another thing that puts this into a little bit of a question is, this dropping down. So all trades have questions too. But again, what is important? That, okay? This buying, the change. So when you're looking at the market and it's going like this, it's going down, it's all over, it's the end of the planet, and then you see this. Isn't that a change? That's what you have to be looking at, rotations. So you get this down rotation. Where's the other side? Well, so far, if we're looking at this, down rotation, where's my up? Less. Down rotation, where's my up? Down rotation, where's my up? Down rotation, where's my up? Well, that's resistance. Too high. I'm out of here. Down rotation, where's my up? Down rotation, where's my up? Down rotation, where's my up? There it is. Change. Now what? Pullback. Where's my structure? It's here. What fits my risk parameter? Out here. There it is. So all I'm saying is, when you get the trigger, your urge or FOMO is going to be to chase it and get in over here, because now you're sure it's going higher. Well, we're not sure of anything, but look where your stop would have to be, out here. So what makes more sense? Risk management. Okay? That's all I can tell you about it. And then whatever it does, it does. So let's get back here and see what's going on. You guys have questions? And again, this is the primary target, but we might not be done. And where is potential support? Let me show you. This. And why? I'm going to give you a why. Let me show you. Why? You always have to ask why. Here's why. Variable high volume node, sweep, break, sweep, reverse, sweep, counter rotation. This is a little more order flow related, potential long continuation, very aggressive, and then you're coming back here. So if you can operate 74 to 77-ish for a scale, because you got to scale before this micro right up in here. This is very advanced, but these are, this sets it up, okay? Advanced. Let me put another little thing in here for you. This is a reversion. You see this here? This is a continuation trigger. What did we have down here? Does this look somewhat familiar to you? Selling up, retracement long. What do we get here? Selling with sweep. And what was this? This was suggesting that, and what it did is it did the opposite, and that suggests back to there. Does that make some sense? So if you get in here, it would require a limit order, not buying it here. And the reason is you got resistance right here, because that's the high. And it's a naked VPOC. So to go higher, you got to get above this thing. If you get above this, put your helmet on and off you go. Then you're looking for out here someplace. If you can't get back above here, then there could be trouble and a counter rotation. That's what I can tell you. This is extremely aggressive. So this is not what developing traders should do. But what I like to do here is I like to show you structure. Because if this shows up at other locations, you might want to do something with it. Let's see what it does. Can you see the logic of this, this, and this? Right there. Right back there. Okay? To the IB. Actually, it's the IB. So what you would have with this is there's two trades that's set up here. And the only one I would take is the longs from down below. We have two trades here. One is called the IB continuation trade. The other one is called the IBF, which is a reversion trade. So for me, since we're out of range, out of value, I don't take the shorts. I just take the longs. And I don't care about the shorts. unless I'm going to trade the short because it's part of my plan. And for developing traders, I'm always going to suggest trade with the dominant side because it's going to give you a higher probability in this condition. We're not inside a range. We're not inside a value. That means the perception of value below us is too low at this time. So and we tested it. We went back inside there and we found our buyers. So we squeezed out the shorts when we missed this first time up. And now, don't we want to maybe think longs versus shorts? You say, what do you think? So this is important, okay? We can get through here. Let's go take a look at the higher time frame. And these are not recommendations, it's just structure. Remember, this is our target. And I went over that at the top of the string. And it doesn't mean anything. What do we know? Yesterday's retail price. On sale now. Can't buy them. Stores sold out. Current developing retail price here, and the previous retail price that was too high here. If I can get over this, possibly I can start coming up here. And this sets up the possibility of coming out here and getting to that one eventually. Or again, the or is, or maybe not, you see. So in the profile world, which is auction based, this was too low on this day because it's the ETH low. In this day, we tested yesterday's low in the ETH, too low. We open up here somewhere, we come outside, we come up here. And at the moment, at the time, we missed it by a little bit, and then we blew out the longs. Where did we come back? I believe we didn't get back here, so this is too low. Let's come back and look at this thing. I just got to be sure. So if I can look at this auction, where's my low? There's yesterday's low. I didn't take it out. What about yesterday's volume point of control? Did I take it out? No. Too low. What does that tell me? I can get long somewhere if I find it. So, you see the story? So in your trade plan, and it's not knowing that we won't take it out or what we're going to do. It's knowing change and then understanding where the market might go. The thing for us that is difficult is the randomness of the rotations, you know? Does that make sense? So, and what is this? Let's come back. Advanced, okay? And guys, when I say advanced, I'm not kidding. Notice the behavior. Notice the behavior. Now you're going to say, well, how do you know that? I don't know. Say, straight oil from the can, guys. I don't know. Well, I'll tell you what I do know. I know I have a sweep. I know I have a sweep. What else do I know? I know I have a over 90% probability to go here. And I know I have a high probability to go there. And I know if that's here, that if I pull back and this is my structure, I can buy it to go there. Right there. Support, resistance. This is a whole different, as they say, can of something or other. And I can use it in an advanced process because I'm slicing this down into microstructure. And this gets much more complex because when we think of time frames like you do, there's no time here. The auction is not based on your clock. Now you can do anything you want. 5 minutes, 1 minute, 2 seconds. What does it matter? This is not time. This is rotational behavior. And buyers are here because you see the absorption and you see the icebergs. Buyers are here. That's absorption. When you see these red bubbles and it's not going anywhere, that's absorption. Now, what's on the other side? Sellers are there. Green bubble didn't go up. What is that? Absorption. What happened here? Absorption and a sweep, downside rotation. So I can read the order flow and I can understand what might happen. I can't predict it. I know where it might happen because of this. You see this? And now the trigger I was showing you down below at the bottom of this swing, it's the same kind of behavior, but it got within, what, 2 ticks. I consider that a direct hit in this business. Are you guys tracking? Is this making some sense? Please give a like if you're visiting in YouTube. I know you don't like the dropouts, neither do I, or my laptop crashing. It's about 85 degrees here, so the laptop goes, I'm out of here. Where's the air conditioning? So, and there's no air conditioning right where I'm sitting right now. So it gets a little interesting. I think the laptop wants to head for the pool. So where's my resistance? It's here, microstructure. Let's look at the microstructure. Now, when I am sharing this microstructure, you got to be very careful not to get myopic and start thinking you can trade microstructure. The better way to be operating with microstructure is retracements because it gives you time. Now, the other part of microstructure from the other side right here is, now, no clue. What happened here? See the change? So what do I have here? My buyers are here, and there's my down sweep. Let's look at what happened before. What do I look for? Continuation higher. What happened? Shows me rotation. What happened over here? Sweeps. What do I anticipate? Continuation lower. It went higher. Sweep here. I'm anticipating higher. It goes lower. Back to this, which can give me, think about what's happening in the order flow. So if I know this is resistance. This is support. See? Does this make sense? I'm showing you something that's really an advanced process. Now, when I say advanced, this is a language. And if you want to learn to speak any kind of language or play a musical instrument, you really have to understand what you're looking at. So trading is not mechanical, at least the way I experience it. To me, it's language. So I can read the language, but I can't predict anything. When the market doesn't do something, it's if this, then that. If I don't break down and I come back up here, if this, then that. If not, then what? Then that. If this, then that. If not, then what? Then that. If this, relative to that, is too low, then what? Then that. If this didn't go up, then what? Resistance. Then that. If this is too low, then that. If that is too high, then that. If this doesn't go down and get below there, and the trend is up, then what? Then that. If I can't get above here, then what? Then maybe that. You see? Is this making sense? So you understand, there's nothing to predict in this business. What is there in this business? A vetted, structured plan. Why do you need a trade plan? All the work is done outside of the market. You cannot respond and make it up and expect to stay in the business. I'm sorry. It's a great video game. Be sure to go get the cocktails and the ticket to the buffet because you're sitting on the gambler side of the table. No sustainability. Sorry. Now, maybe you'll be the exception because you're special, but we all think we're special. But you're like everybody else if you don't do what needs to happen to stay in the business. Trade plan is something where you know your trades, where to look for them, your triggering structure, your risk management process, your targeting process, and trade management. So, where's this thing fail? Well, down here. Then either you're out here and the trade is done and you go back in your Barca lounger, or you have another runner on here that's your manager. And you're willing to give the MFE back because that's the only way you get an outsized range, right? You need to know what you will do. You don't make it up here. If you have to ask the question, what should I do? You're in trouble as far as sustainability. The question to ask is, what's the market going to do? Because there's no answer, because we don't know. So the answers have to be in your plan, and the plan needs to be created before you ever put your first trade on. That's what TraderLab is about. And if you're interested in TraderLab and what it's all about, there's no cost for it. It's open to everyone. It's a community of like-minded traders that have come together to leverage their collective experience. It's really a quid pro quo community. Traders donate their time, their skills, their expertise for data mining, their trade plans. They give. And in return for giving, they get from other traders. It's the collective leverage that creates the potential for outsized results. I hope you find this useful. TraderLab is open to everyone. You don't have to be a Bookmap subscriber. You won't be solicited, but I have to say to you, it's not romper room. It's about the business of trading. If you're interested, use the link in the bottom of YouTube. Say hi, visit the TraderLab, and I look forward to seeing you there. Thanks again. Don't forget to give a like. Sorry about the technical issues. It isn't every day we have a transformer explode here in Costa Rica, but the monkeys, they like swinging from different vines, and unfortunately, they don't know the difference between a power line and a tree. And by the way, they're setting up ropes here, or little highways for the monkeys, and these aren't little monkeys. These will take your arm out of its socket, just so you know. So, but anyway, please leave the like. And this stream will be spliced together and probably available later today. And don't forget, there's a library of webinars in the TraderLab, the TraderLab community, a document section, and a lot more. Thanks again, guys. Look forward to seeing you in the TraderLab.